Hello, my name is Tim Wyatt and I'm part of the team at Wyatt & Co Chartered Accountants, and I'm giving a presentation on navigating cross-border taxes with some key considerations for Ukrainian nationals who are living in the UK but still receiving Ukrainian income, and really looking at how to navigate particularly the UK tax system. It's been an honour for me and a number of my colleagues to get to know a number of friends who've come over to the UK from the Ukraine as part of either the Ukraine family scheme or the Ukraine home schemes while the conflict and war in Ukraine is taking place. And we've been approached by a number of people who've asked us regularly what they need to do in navigating the UK tax system, in meeting the various laws, regulations, and various of the bits and pieces they need to do for UK tax law and what's applicable. And I've done this presentation specifically on the back of those requests and that information, and also on the back of my own research in seeing what is available from HMRC and other places, in realising that actually the situation is quite complex. And I'm going to try my best through this presentation to make it more straightforward and cover a number of key points, principles and areas that people need to be aware of who may be in a situation where they need to complete a UK tax return, whom are Ukrainian nationals living in the UK. These are the kind of things I'm going to cover. There's going to be a bit more detail, but essentially I'm going to have a quick introduction, understanding the UK and Ukraine tax treaty, having a little bit of understanding about residency and the principle of residency and taxation, looking at double taxation relief between the UK and Ukraine, looking at the reporting requirements specifically for UK tax returns and reporting requirements, understanding tax thresholds and personal allowances, understanding what the registration process for self-assessment tax returns in the UK involves, and looking at a specific example of a tax calculation and how the double taxation relief works for a specific scenario for a Ukrainian national who's living in the UK who is receiving income from Ukraine, with a conclusion and some final thoughts. Sadly, this presentation isn't in Ukrainian. I'm going to speak as slowly and as clear as possible for those individuals who may end up watching whose English is still being refined while you're living in the UK, and maybe it's your second language or maybe even your third or fourth language. So hopefully you'll be able to follow and understand what I'm sharing with you, and I'm going to show a number of references to other resource websites that I've come across during my research, and just making sure everything is as clear as possible. So a quick introduction. Essentially, UK tax, international tax in a globalized world is a complex one, and there's lots of scenarios and situations which differ, but it's really important to have a number of understandings and key principles about how international tax works for people who are living in the UK and who are classed as resident, and how all that works in terms of UK taxes. We're going to delve into the concept of residency and what it means to be a resident for tax purposes and the implications that has. We're going to look at double taxation relief and highlighting reporting requirements. And I'm hoping by the end of this presentation, you particularly will have a bit more understanding and be a bit more confident in understanding how the UK tax system works and the agreements that UK and Ukraine have regarding double taxation, and what your next steps may need to be in your situation. So let's just understand the UK and Ukraine tax treaty that's in place. And it is a complex one that's taken place over a number of years and governs how UK residents with Ukraine income need to work out their tax affairs. It contains several key points of provision regarding individual taxes that are specific to their type, and I'm not going to go into lots of detail about the types, but going to cover some key general points to be aware of. One of the main provisions and components in part of the treaty is all about determining where you are resident, and that is essentially where you should be paying your tax. and that principal residency, and that generally determines which country you should be paying your tax in. So for example, if you are determined, or it was deemed that you are a UK resident with Ukrainian income, you may end up being taxed in both countries, and how the treaty deals with that to make sure that you don't get taxed twice is outlined in the treaty, and is called something called a double taxation treaty or double taxation relief. And that's what the treaty is basically outworking in lots of varying details in lots of differing scenarios. But essentially it is underpinned by understanding where you are resident in any given tax year and where you should be paying tax, and if you're being taxed in both places, how the relief and treaty can work in your favour. So let's just look at residency and taxation. Residency is crucial to understanding what you need to do for any given tax year while you are living in the UK, while you have Ukrainian income. It's important to understand a number of factors as to what determines whether somebody is classed as resident in the UK for tax purposes, and there's lots and lots of ways of which that is assessed. The simplest way, I'm not going to go into all of them because there is a very helpful resource on the HMRC website in the UK that helps you work out whether you are deemed to be a UK resident. But one of the easiest rules to be aware of is outlined in here, and that essentially an individual is generally considered a UK resident if they spend 183 days or more in the UK during a tax year. And to be clear, a tax year in the UK runs from the 6th of April through to the following 5th of April. Now, that means that for most Ukrainian nationals who came over to the UK as part of the Ukrainian Homes or the Ukrainian Families scheme that the UK government put in place and arrived between April and September 2022, will mean that the vast majority of those individuals will be classed as UK resident for tax purposes because you have been in the UK for over 183 days. There are some far more complex ways of calculating that and working out whether you are a UK resident for various different assessment tools, but the easiest one to understand is if you have been in the UK for over 183 days, it is highly likely that you will be deemed by the UK government to be tax resident in the UK based on that very clear principle. If you have been under those days, I would still recommend that you complete an assessment on the HMRC's website or look at the more detailed criteria to work out whether you are deemed to be a UK resident for tax purposes. So let's just look at double taxation relief. Double taxation relief is a provision that helps prevent the same income being taxed twice in two different countries. So for example, if you're a UK resident with income from Ukraine, it's very possible that you will end up paying tax in both countries, depending on your scenario and situation with your various different types of income. However, the good news is that the UK and Ukraine tax treaty provides a double taxation relief, which means that you can claim a credit for the tax paid in Ukraine against your UK tax liability. And it's important to be aware, which I'll cover a bit more detail shortly, that when you are classed as a UK resident for tax purposes, you are taxed on your worldwide income or taxed on what you remit, as in what you bring into the UK. I believe there is a choice, but essentially normally it is taxed on worldwide income. So this double taxation treaty is really important to make sure that you're not overtaxed unfairly. Just going to spend a little moment explaining about tax-free personal allowances in the UK and kind of trying to build up the technical picture for those individuals who aren't necessarily aware of how all the tax intricacy works in the UK. But essentially, if you are a UK resident for tax purposes, there's good news. Everybody receives a tax-free personal allowance, meaning that you only start paying tax up to a certain point. or after a certain point, and that threshold is £12,570 for the current tax year, or for the tax year that was just gone and the current tax year we're in, so up to the 5th of April 2023, and the current tax year we're in up to 5th of April 2024. And what that means is you can earn up to £12,570 in income during the tax year, and you won't have to pay a single penny of income tax. And this is a significant benefit, and it's what you've worked hard for, and means you don't have to pay any tax on it, which is brilliant. Now, depending on your situation, the good news is that this tax-free personal allowance applies to pretty much all types of income, whether it's your wage from your employment or salary, pension, savings, property income, dividends, savings income, lots and lots of ways, but there are some things that don't. But essentially it is there to cover the vast majority of types of income that you may receive within the UK and outside of the UK on worldwide income. Just going to cover a slight some information on UK tax thresholds for Ukrainian nationals who may not be aware. So as of the tax year 2023-2024, which is the tax year we're in now, which started on the 6th of April 23, the basic rate of income tax is 20%. And my understanding is that the main rate of tax in the Ukraine is 18%, and 20% is applied to income between £12,571, which is just after your personal allowance, up to £50,270, and then a high rate of tax kicks in at 40%, and that is applied to income between £50,271 and 150k, with an additional rate of tax 45% applied to income above 150k. So it's just to be aware that they're the thresholds if you're not already aware. Just jumping into reporting requirements. Now, if you have income that is outside of the UK, but you're a UK resident, essentially if you're receiving income from Ukraine while you're working remotely in the UK, it's highly likely that you'll need to complete what is called a self-assessment tax return to tell the UK government that's what you're earning. The key thing to be aware of is the reporting deadlines for that, and I believe the reporting deadlines for a UK tax return and a Ukrainian tax return are different. The key thing to be aware of is the UK's tax year end for 2023 finished on the 5th of April, and there is a filing deadline for that tax return of the 31st of January 2024. So a number of months away from the point at which I've recorded this video and done this presentation. But it is still important to be able to understand and make steps to register between now and then to avoid any rush. What I'm going to bring up on the screen in a moment is an example tax calculation for a specific individual based on how the tax relief works. I'm just going to slightly change the order of my presentation, but I'm going to cover a specific scenario where a tax return is needed for this individual, where this individual receives Ukrainian sort of employment income, but is resident in the UK for tax purposes and works remotely, and has tax deducted from their employment income by their employer in Ukraine. So I'm going to cover that shortly, but I'm just going to cover some specific reporting scenarios that is outlined by HMRC. I'm going to cover this because it's important, because there are some specific rules that the UK government through HMRC outline, which are not necessarily straightforward and are a little bit confusing and complex in nature. And one of the reasons why they're a bit confusing and complex in nature is the first two scenarios, which is I'm going to cover, is if your Ukrainian employer has an office in the UK. There are some specific guidance in this scenario, and there's differing guidance if your Ukrainian employer does not have an office in the UK. And both of these scenarios are more confusing and complex because they have guidance which is out of the control of the individual who is required to report their income to the UK tax authorities. So I'm just going to pull up a website now, which is on the gov.uk website from HMRC, which outlines some of these scenarios and what to do. So just an example here, if your employer from Ukraine has an office in the UK, the HMRC and the UK government expect that your employer must deduct your wages and report your income tax and any national insurance contributions to HMRC if you are one, a UK tax resident, as in you've been in the UK for more than 180 something days, and you work for and are being paid for by an employer that's based in Ukraine, but they have a UK office, and they would essentially expect that that you would be classed as an employee in the UK and would have tax deducted following the UK tax system and not the Ukrainian system. Essentially, you'd be paid and employed through that UK office is essentially what this is getting at, which again is outside of the control of the individual who may be needing to make sure they're declaring what they need to HMRC. So this is something that you may need to talk to your employer about if you're aware that the company you work for has a UK office, and there's some specific guidance on here. The second thing I'm going to cover is what do you do if your Ukrainian employer does not have an office in the UK? And this, again, is a little bit more confusing as well, and the guidance is not very clear. It says here that you may need to pay your own income tax and national insurance contributions through what is called a direct payment scheme. And this direct payment scheme, there's not as much information available online through it, and they suggest making a phone call. But if you read a little bit further, you will see that you may also need to fill in a self-assessment tax return. Now, this is something I'm not 100% familiar on, and is something that as an individual you may wish to call HMRC on and find out about. I am aware that you can ask for an interpreter. Just to give you a word of warning, that here in the UK we often find having access and phone calls with HMRC notoriously difficult, with very long waiting times, and sometimes don't get the most clearest advice that sometimes you would like. But this is the guidance that's on the government's website. But it also goes on to explain that you may also have to fill in a self-assessment tax return if you have employment income in Ukraine, or are there any other sort of income from Ukraine while you are a UK tax resident. So this is sadly not a very helpful bit of guidance from HMRC, in my opinion, on the gov.uk website, and I'm going to give my thoughts on this in a moment as to how to navigate this. In our experience in providing tax services to individuals who have income from many other different countries, the usual and most common way that always gets dealt with is through a UK tax return. So what's called as a self-assessment tax return, which is normally how everything gets dealt with and communicated to HMRC and tax paid as well. So the fact that there is a potential other scheme available to be able to do that is a little bit confusing when there's not a lot of information available about that, and any specific information that relates to any UK-Ukrainian scenario is also not very clear online from my own research. So the fact that there is an expectation that because you have in a scenario foreign income, whether that's from Ukraine or any other country, when you're a UK tax resident, the normal process would be to complete a UK tax return. And that's why on here I've essentially got point 3 is that if you are a UK tax resident for tax purposes under the treaty for HMRC, you would normally complete a tax return, is what you would normally need to do. So that, in my advice, would often be that one of the easiest ways for you as an individual to be able to take control of your situation in making sure you are compliant with the UK authorities and tax legislation is that you are able to complete a tax return, communicate to the UK government what income you're earning outside of the UK while you're a UK tax resident, and you can apply the very helpful double taxation relief on any taxes you have paid in Ukraine, so to make sure you're not being double taxed. So there is a route through here which means that, that as far as I can see it, the individuals can complete a tax return that's in their control, where they don't get double taxed, and they can communicate everything they need to the UK tax authorities. So that's at the moment is my suggested route through if it is unclear whether your Ukrainian employer does have an office in the UK, and if you certainly know they don't have an office in the UK, and it is unclear about what this direct payment scheme may look like for you, you always have this option of registering for completing a self-assessment tax return and doing so to be able to communicate what you need. So what I'm going to do now is just jump back to this slide and explain to you on screen what a calculation for a specific scenario looks like in the UK on a UK tax return. So just going to go over again. This scenario that I'm going to go through is for a Ukrainian national who is resident in the UK for tax purposes, has lived in the UK long enough to be classed as that, is working remotely for an organisation in Ukraine, and that they are deducting tax from that person's income in Ukraine, and that they need to declare that to the UK authorities, to HMRC, in some form. In this case, in my example I'm giving, through a tax return. So I'm just going to bring that up on screen now, and this is an example tax return calculation that I've created, and I'm just going to talk you through how this calculation works. So I have assumed in this example that this individual from Ukraine has received an employment salary and wage of £30,000. I'm not sure what the equivalent that would be in Ukrainian currency, but I've assumed that is £30,000. They have then been deducted £5,400 of tax in Ukraine on that wage, which works out at 18%, which is what I understand the national taxation rate to be in a normal average scenario. Because this person is a UK tax resident, they are allowed a full tax-free personal income allowance of £12,570 for the tax year that we're in, which is 2022-23, ending on the 5th of April 2023, which means that they have taxable income in the UK of £17,413, which, based on the thresholds I'd mentioned previously in the presentation, means that they are taxed at 20%, meaning that the UK government is expecting this individual to pay £3,486 of tax in the UK. So that is how the calculation works. And then what happens is the double taxation treaty that exists between the UK and the Ukraine comes into force, and the system and the rules know that £5,400 of tax has already been deducted from this person's wage in the Ukraine, and it sets to limit that and to change the calculation to remove the amount of tax that has already been paid to a limit of the tax that has been calculated that's due in the UK. So you can see that there was £5,400 deducted in the Ukraine. It's limited that to the total amount of tax which is due in the UK of £3,486, concluding that no tax is due to be paid in the UK by this individual in question. So that is essentially how the calculation works in a very simple, straightforward scenario for somebody who is employed in Ukraine, taxed in Ukraine, but is a UK resident for tax purposes. Obviously, that is a very simplistic scenario. It doesn't assume that there's any other property income, dividend income, savings income, or any other income that they're receiving in the UK while they're in the UK. So this picture could look a bit more confusing. It can also look a bit more confusing if your Ukrainian employer does have a UK office and is taxed differently. So there are a number of scenarios where this is a little bit more could be more complex, but I'm hoping just to give you a simplistic idea of what that does look like. Well, let's just have a quick look at registering for self-assessment tax to be able to complete a tax return if you feel that this is, the right thing for you to do, if those scenarios you've looked at conclude you to this path of way of making sure that what you're doing is compliant, and you've not been able to work things out with your employer, or for various other things you think the scenario you're in means that you need to complete a UK tax return. This is how you would essentially register for that. It's very straightforward, a fairly straightforward process to do, and you can register for a self-assessment tax return through the HMRC website, which I didn't mention earlier in the presentation, that HMRC stands for Her Majesty's Revenue and Customs, to create what is called a government gateway account. that once you've registered, you can then proceed. Once you've registered this online account, you can then proceed to complete a self-assessment registration form. To complete that registration form, there's a number of information you would need. Is to provide your full name, your national insurance number, and other contact details such as place of current address and various other bits and pieces. Now, one of the things I haven't covered in this video is what to do if you have not got a national insurance number when you've come over to the UK from Ukraine. There are a number of resources out there online that outline how to do that. So I'm just assuming in this video that you have already done that and have a national insurance number. Once you've completed that registration, HMRC will send you a really important code in the post, which is called a UTR number. And a UTR number is your unique tax reference number, which is the essential tax reference number to be able to complete a tax return or for someone else to complete a tax return on your behalf. So that's really important, and that's you would then be able to log back into your government gateway account that you've created, and if you wanted to, go through the online process of completing a self-assessment tax return. Now, this is the bit where I outline how, if you wanted to, how we as a firm could support you in that. It's our experience that completing a self-assessment tax return through the government gateway and online account is not always straightforward and can be a little bit complex, and that is one of the reasons why we provide a service in completing tax returns for individuals, businesses and the like, whether they have international income or not. So if you wanted some support in completing your tax return, that is something we are able to do for you, and we're also able to help you register for your self-assessment tax return as well. So if there was something you wanted to help in doing, in one, registering for having a tax return, and then two, completing your tax return, that is something we do, which you'd be very welcome to get in contact with us, which our contact details are all through our website. To conclude, navigating cross-border taxes between UK and any other international country, can be complex. In the situation of UK and Ukraine, that is the same. It is complex in parts. It is made a little bit more complex that there are some specific rules as to how individuals who may be employed, who have a Ukrainian employer who maybe has an office in the UK, needs to deal with their tax, and that there is some ambiguous guidance as to how that works. Either way, I'm hoping I've outlined in this videocast a number of key principles, information about residency, the tax rules in the UK, and that essentially what will probably boil down to, if you are unable to work through what's going on with your Ukrainian employer, that you will highly likely need to complete a UK self-assessment tax return to capture your worldwide income and declare that to the UK tax authorities at HMRC, of which you are unlikely to have to pay tax in the UK if you're paying tax in the Ukraine, depending on your scenario. That may not be the case in every scenario, but in the scenario, an example I've looked at, you would see that actually that individual did not have any tax to pay in the UK because of the double taxation treaty. If anyone would value any support in navigating through these rules, registering for self-assessment tax return in the UK and completing a tax return, then please do visit our website at wyattandco.net, and you'll be very welcome to get in touch with us. We sadly do not speak Ukrainian, even though I'm dabbling and learning a bit of Ukrainian. We sadly and also don't have access to interpreters, so just to make that as clear as possible, but we would be very willing to speak to you if you thought we would be able to provide any other assistance at all. Thank you for watching this video, and feel free to get in touch with any questions about our services or the content in this video, and it's possible that we'll be able to signpost you to some further resources that we're available that are, have been made aware for a number of organisations and charities that are aiming to help individuals navigate through the tax system for those individuals who've moved to the UK from the Ukraine.